Every historical indicator indicates that 2021 is going to be a bumpy ride. So buckle up. But don't worry, I'm going to help you get wealthy in 2021. But before I get into that, I got to tell you about the mistake I made. 2017 to 2020 was a year that I had a lot of rental property here in Denver, over 40, that I just sold. I thought there's no possible way that the market is going to keep going up. Houses I was buying for $77,000 were now selling for $350,000. I said to myself, now's the time to cash in. And for a while there, I looked like a genius. The market between May of 2018 and May of 2020 kind of flattened out. The issue was I never predicted what the summer of 2020 would look like. I never predicted that we would have the amount of money printed that we did. Trillions of dollars with a capital T. What happened was all of these investment markets, real estate, Bitcoin, stock, went through the roof. The mistake I made is predicting the market. You see, I've read a lot of articles, talked to a lot of experts about what 2021 is going to look like. Some of them believe that the market is going to continue to go up and up and up, and they've got great reasons for that. We have an administration that's likely going to continue to print money. We've got a political party that has control of the White House, the Senate, and the House of Representatives. They have the ability to vote and do whatever they want to do related to our money, and they think that they're going to continue to print and print and print. And what it does to the short-term housing market and the short-term stock market is likely that it's going to go up. I've read those articles. The other articles that I've read is no, we are at the limit. We printed way too much money. We're about to see another crash. We're going to be going down very, very swiftly, like the Titanic. And it's now time to get into commodities. It's now time to get out of stock. It's now time to get out of risky investments. That's a popular opinion. Well, I'm going to tell you what my opinion of 2021 is. It doesn't matter. It doesn't matter for real estate investors. Part of the allure and the benefit of being able to be a real estate investor is the fact that we don't have to time the market. You see, we just have to make solid decisions about real estate and we can still make money. We don't have to catch the swing. We don't have to buy at the bottom and sell at the top. We're able to make sound decisions and let the market come to us. So my advice for 2021 is to follow a few simple rules. Number one, no balloons. A balloon loan is when there's a certain day where the entire note needs to be paid off right away. Try to get out of those balloons. And the reason is you don't want to have to pay off that balloon when the market is down. You want to be able to pay off that loan whenever you want to. You want to be able to control when the loan gets paid off. You don't want to have the bank make you pay it off. They may make you try to pay off the loan when it's untimely for you. Number two, get rid of ARMs. An ARM is an adjustable rate mortgage. Now, those who are in ARMs right now are sitting pretty. You know, the interest rates have gone down and it's made it so that loan that you received a couple of years ago, it's pretty cheap. However, remember that ARMs can also go up. Now, the government passed some laws limiting how much ARMs can go up, but an ARM has the same principle of a balloon. You want to be able to control when you pay off a loan. When an adjustable rate mortgage goes through the roof, you may not be able to afford the house and have to sell. Now is the time to avoid having to sell any real estate, any asset. You want to be very secure in all of your investments, whether that's real estate or stock or Bitcoin or gold or silver, whatever it might be. Now is the time to make sure that you don't have to do anything. Real estate makes it so we don't have to be concerned as long as we're following some fundamental principles. Number three, select good tenants. We are about to go into the spring, and if you've got some stinker tenants, I know that it's going to be difficult with the eviction moratorium, you're going to have to make sure that you're going into the rest of this year with some good tenants. I would even suggest doing cash for keys. Pay your tenants to move if you have to. Don't let them sit there and dictate to you what is going to happen to your property. Fight as much as you can. Not physically, be nice, but make sure that you have good tenants and that you're doing a good job with the house. Number 4, make sure the house can afford itself. An often overlooked thing that new investors deal with is not accounting for reserves, meaning they don't have extra money for taxes, insurance, management, maintenance, and vacancy should something go wrong. Excel is a liar. It's a tool that gets overemphasized. You can plug in as many numbers as you want, but it's going to lie to you if you're not careful. The purpose of having a reserve makes it so that you know you can afford the payments on this thing. The second thing, though, is that your analysis needs to be accurate. If you've gotten into some deals that you thought you were going to be making $400, $500, $600 a month in cash flow, and the reality is you're only making $50, $100, $200, if you're losing money on a house, dump it, dump it, dump it. Number 5, and this is the most important part of this entire video, be a good investor. As long as you're making fundamental decisions and you've got good properties in good neighborhoods with good tenants and you've done a good job as an investor, you have nothing to sweat. It's those dogs that you might have picked up along the way that are really hurting you. Now would be the time to dump them, just to make sure that if the market goes the wrong way, you're safe. However, it's the same principles I would give in a down market, in a middle market, in an up market. Be a good investor, make good decisions. And that is the main purpose for this whole video. Now you fix and flippers, don't worry, I'm not going to leave you out. The fix and flippers are the ones who need to be very, very, very careful, even more than my buy and hold guys. Number 1, make sure that you're not too leveraged. If you're too leveraged, you run the risk of that property dropping in value and you being stuck. I've got a friend of mine who says he's never lost money on a deal, but he's got 26 rentals, okay? This would be the time that you get into a fix and flip that doesn't flip and turns it into a rental. Additionally, about leverage, if you are going to leverage, please, I beg of you, don't personally guarantee that loan. Personally guaranteeing a hard money loan is the easiest way to make sure you get served a lawsuit on your front door. It's the easiest way to make sure that your personal assets get taken away from you. A hard money loan is lent against the asset, not against you personally. Try to avoid those kind of loans. Rule number 2, make sure your crews are fast and efficient. Now's not the time to allow those contractors who go dark on you for 3 or 4 days to continue to work for you. Make sure that they're not a part of your team. It is where your biggest threat is a 3-week rehab or a 3-month rehab turning into a lot longer. Pay them a little more if you have to, but make sure you're not allowing contractors to steal money from you via going dark, not showing up, not doing a good job. It's too risky. Number 3, run good comps. Running good comps is the backbone to every fix and flip operation. You're going to be tempted to overshoot your comps. You've heard stories of properties selling for above list price with multiple offers, for cash, within 3 seconds. And I get it. The temptation is to say to yourself, this house is worth $250 now, but the way the market is going, it could be worth $300. Don't fall for it. Because that works every single time, except for the last one, when you're stuck holding a property that doesn't flip. We've got to make sure that we are getting in and out of these deals very quickly, efficiently. We have a good idea what the comps are, and if you get above list offers, and if it sells in 3 hours, good for you. That's a cherry on top. Last rule, rule number 4, avoid emotional decisions. You can get caught up in the emotion of the market being hot, inventory is low, listings are flying off the shelf, you're getting above list price, multiple offers, people are competing, bidding war, and it gets very, very excited. But if you're acquiring fix and flips right now, hoping that they're going to be worth 5, 10, 15% more than they are when you buy them, you are in for a beating. That's how you're gonna lose. I've flipped over 100 houses. Every time I've lost money on a fix and flip is because I made an emotional decision along the way. I thought that this house was worth more because of certain things that I knew were outside of a fundamental fix and flip evaluation. And every time it bit me in the butt. Make good, solid, fundamental decisions regarding your flip. So the fundamentals of real estate investing stay true regardless of where the market is. Don't buy into the lie that now's not a good time to buy. If you continue to buy into that lie, never will be a good time for you to buy. Cash flow your rentals, get in and out on your fix and flips, make sure that your comps are solid, make sure that you've priced your risk. There's margin to be made. For a while there, I was one of those guys timing the market, thinking I was smarter than everybody else. Let me put it this way. If you time the market, you lose. Get in the game, do deals, follow some fundamentals, and you'll be just fine. Hey, thanks for watching this video. If you liked any part of it, please subscribe, hit the like button, and I'll catch you on the next one.